All right, ladies and gentlemen, hope you guys are having a wonderful weekend. We finished up our first week of earnings, well, at least with some real companies. It is about to get a lot more exciting. We got the Fed about, a week and a half away. And I really want to talk about what happened today because there was a lot of things. One, how it developed midday following all of these earnings and then the news that came out. There's two things. One, we made a video on yesterday with the Federal Reserve, and then now there is Iran back into this mix. And it may sound a little weird, but both of these have a huge effect on the stock market. So I want to go over that. We'll briefly recap some of the plays and some of the other things that happened in the stock market today and kind of cover that. But if anything, we will talk about these on the watch list. So get ready for that on Sunday, and make sure you guys have a good weekend. If you made money, stay in the game, and make sure you keep that money. If you lost money, stay in the game and keep your head up, because you guys can see even what today produced. All it takes is one of these plays, and there was a lot of random plays and a lot of things that popped off. So I want to cover that and make sure everybody is on the same page. So let us get into it. The first thing has to do, because this is what happened today. Really, this is even the market. Why did it go up yesterday is what we discussed, and this was after the Fed Williams speech. And this is what I want to talk about because, one, this is what caused it, and then today when the market started to go down around here, this was because of Fed Williams. Again, the New York Fed clarified again what he was saying, and that's what I want to show you guys specifically what everything was. But they clarified that, but now, ironically, at the exact same time, literally within 1 or 2 minutes of each other, the news that was starting to hit, it was related to Iran. And Iran seized, I think, 2 ships in the Strait of Hormuz, which we've talked about. It's very important. That's a choke point for a lot of the world's oil that gets transported. They seized 2 British tankers, and now this escalates the tensions there. And now, even right now, there is still British ships and even U.S. ships in the Strait of Hormuz, but now the U.S. is starting to protect the British ships with armed officers now. So the tension is kind of going back up. And the main thing I say to look at with all of this is oil. So we can pull up /CL here. Oil didn't make too big of a move. That's why, and I've been thinking the Iran tensions wouldn't bring up too much, but we're going to talk about that at the latter point. But let's see what happened here. This is the Fed thing. This is what I said yesterday. The Fed tricked the market. This is literally the NewYorkFed.org. This is the Federal Reserve Bank of New York. You click here. This is their first thing. This is the guy who caused everything. Williams, living life near the ZLP, not PB. The ZLB stands for the zero lower bound. And now this is referring to when interest and nominal interest rates and the short-term interest rates are pretty much near zero or at zero. So this is what he's talking about. You could see here, and Mr. Williams is the president and the CEO of the Federal Reserve Bank of New York. This guy is the head. That's why his comments held so much weight. And he's giving this remark, that's what it says, at an annual meeting of Central Bank Research Association. And even then, I'm going to try this. You could request the speaker at the Federal Reserve. I'm going to see if we could get Williams on the stream, see if he'd like to speak for the Colt. But again, I'm telling you that now so you can see the context. I think it's literally just timing that this happened. He was supposed to speak and has his schedule already made, and happily enough, he was talking about this. But here's the point. He's talking over the past quarter century. There's another thing. Pretty much he's saying in the last 20 years, in the last decade, and everything we've been going about, he's talking about low rates and even zero, even negative interest rates to a degree. But this is the conclusion that sparked everybody to say, this is dovish. The Fed is going to cut rates. Again, what I'm saying is just think of the coincidental the timing of it. And some of us would believe there's no coincidence. And I don't think this is a coincidence. I just think, on my personal opinion, we've talked about this, I think the market is just trying to reach for whatever they can to say, no, the rates are going to happen. This is what's going to happen, so on and so forth. So that's my take on it. But you can see here, this was the conclusion that left the markets just rallying up yesterday, and people got really, really excited about. It was the ZLB has been a topic of study for nearly 2 decades, but recent history and outlook for the longer-term future make it more relevant than ever. This is, again, his conclusion. Low inflation expectations, very low R-star, and slower growth all point to a challenging world where policymakers need to make the best use of tools at their disposal to achieve their goals of strong economies and price stability. Now, this is where the market took it and ran. The key lessons from this research hold today and in the future. First, take swift action when faced with adverse economic conditions. Second, keep interest rates lower for longer. And third, adapt monetary policy strategies to succeed in the context of low R-star and the ZLB. These actions taken together should vaccinate the economy and protect it from the more insidious disease of too low inflation. So even think about that. You could see why people could have this lens of saying, oh my gosh, they're going to cut. That's one aspect of it. And even then, if you guys want to understand the concept, they're saying vaccinate. What is a vaccine? Is when you inject the virus to build up the immunity against it. They're literally saying inject inflation to protect the more insidious disease of too low of inflation, which is kind of ironic, right? But I mean, it makes sense if we're talking medical. But if that being said, this is what happened. And then shortly after, this is where the drop started to come even after hours. Today, it got clarified 2 times. A spokesperson came out, and this is even from CNBC. They started now reaching out, and this was literally at 7:07. And again, it was even updated today, again in the morning. And again, other news sites, they started picking up on it. The New York Federal Reserve, John Williams, was drawing from academic research when he said central banks need to act quickly. The spokesperson says these comments were not about potential policy actions. They were saying that this isn't reflecting anything, but this guy talking about a speech and this, it's honestly like if you hear me talk about something that happened in the history in the past, but the difference is I'm not the head of any Federal Reserve and there isn't a key crucial Fed decision right around the corner. So you could see why they had to, clarify this. And that is both scary and it's scary and telling because look, you could even see this is how people breaking news. This is how mainstream media picked it up. This is how everybody picked it up. And this is the scary feedback loop that could be caused between the Federal Reserve and the markets where now you guys see how hard it is. These guys can't even talk about 20 years ago without people saying they're going to cut rates. Literally, I even said this today earlier. They could literally say, we are not cutting rates next meeting. And people would say, oh, they didn't say it with enough conviction. They're going to cut rates. That's a little bit more of an extreme of an example. But at the end of the day, you could see, but this is a dangerous feedback loop where honestly, they're going to kind of have to set the record straight because this is one of the credibility issues the Fed is worried about. And now this is where I have to ask, is it the credibility of the Federal Reserve or is it investors in the news media being so quick to act and jumping on stuff? It's seeing stuff that doesn't even exist. So that was part of what happened today and why the market went down. But the key now is also at the same time, Iran seized 2 British tankers. And even then, if you even go, I think on CNBC, these are your first articles that you're going to get. One, there was the Mueller thing. These pennies are worth 200,000, but right there, extraordinarily brazen. Iran seizes these tankers, raising tensions with Britain. And now this is very weird because a few days ago, I even said it. The tensions were de-escalating. That is why oil even came down. That chart's not going to be good. Let me get another one up. Here you go. You could see this is why the last 3-4 days oil's been coming down because Iran said, okay, give us the papers. The sanctions were actually affecting them. They said, we'll make a nuclear deal if you guys remove sanctions. Things were getting a little better. And then right at the news of that, they literally said now that U.S. says we shot down one of their drone. And even Iran was like, nah, man, you didn't shoot down one of our drones. Like, maybe you shot down your own drone. Like, that wasn't ours, G. And again, I even said earlier today, I think it's smart on their part. Sometimes this happens. Even Trump said it when they shot down one of our drones. He said maybe it was one of the commanders that, a sole action of one person isn't going to necessarily reflect that country's attitudes. And I think that could have been the case with the drone. But now it's kind of crazy that Iran goes and seizes these 2 tankers. And again, you could get your tinfoil hats, whatever you want to say. But now that escalates tensions. And now the real problem, this will have an effect on the market if it gets worse. And really I think this was more with Fed Williams because, again, although Iran was important, oil's been dropping, but the fact oil didn't go down or up even more off that news, I think it's related more to the Fed. But just like watching the yuan, if you want to see which piece of news is important, you could watch with the Fed, watch the bond rates. If you want to see with crude oil, or if you want to see if the move with Iran or any of these tensions are more realistic, go look at oil. So I'm going to wait till oil makes a move, but essentially now this could escalate. And I think it's interesting because this could throw all those issues back on the table now. But it looks like the situation was escalating as of 3 days ago. if that changes, that could add on top of the markets. And honestly, we'll watch for oil to rip again and see what we get from there. But then again, if it does escalate from here, I think it could have a very serious effect on oil in the market, because now with armed people in the Strait of Hormuz, or the U.S. ready to go, and now if how they respond to these tankers, and if it pulls a deal off the table, it's going to be very interesting. But those are the things to watch. That is what occurred today and caused these moves, and I think they are definitely going to come up into next week, in the next few weeks. So I think the Fed is going to be the most important, and at the same time, we still got earnings. So it's really confusing to a degree, considering you had all of these earnings. Now, what was having an effect on the market? What was causing this push and pull, this cat dog, whatever you want to call it? And as you can see, all across the board, stocks were dropping, and there's CL. And again, I guess another event that did occur today was DDS. We made a put on this. There was two things. One, the Sprint Dish deal not went through, but they said it's about to go through. It's imminent. DDS literally shot up out of nowhere, a crazy amount at towards the end of the day, and this was just based off there was no news. I think it was a short squeeze. You had like 75% of the float short, and it just started to rocket up. I actually grabbed the put on it because, again, Dillard's I think is pretty crappy, but this is going to be a wild event to look out into. Everything else, is just the follow-up for the earnings plays. And then there was gold, and that's one thing I wanted to show you guys, because even now, when the market really first started to drop, I think a lot of people got surprised. Gold didn't go up, even though the asset gold went up itself. So this is something how to snipe these plays is important, and why you can't really play these as a hedge on the stock market. Your better option would be actually playing literal gold futures / GC. So keep that in mind. But even then, towards the end, the UVXY, even that shot up after hours. It went up a little bit. The market came down a little bit, and even other stocks like Facebook and Apple, they dumped a pretty good amount after hours, and they started to give up. So that was kind of the quick recap. It was crazy. The volume was a little bit higher than usual today, especially in the morning, but you could see now we get a big up and a big candle, but now the volume's starting to come back. And like I said, once the volume comes back, we're going to be ready to party. And sadly, though, 70 million is just like an average. If you guys remember, we were doing that at a pretty different point, at much lower points to a degree. So it holds a little bit more weight higher, but we were still in higher ranges here. So the volume has been pretty low, but it is now picking up. So that's it, you guys. I will see you tomorrow for another video, and I'll see you on Sunday for the watch list and Monday on stream. Make sure you guys are subscribed. Drop your thumbs up, and have a beautiful and enjoyable weekend. The cult loves you. Welcome, and if you are new, make sure you're okay. Bye.